Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. As you can see, we're all dressed up in nice Indian attire. Wish all of you, your families, a very happy Dussehra as we look forward to celebrating this happy occasion. I'm Prashant, with me, my colleagues Nigel and Survi. Guys, morning. Happy Dussehra.
Hi, morning. Happy Navami, happy Dussehra, and happy festivities to both of you, to our teams, and of course to all the viewers. May this be the start of a very positive, healthy, and a very prosperous festive season as we get up to Diwali.
Absolutely. Let's just take it from the top then, right? In terms of what you need to know, there is the clock ticking right at the bottom of the screen. RBI policy is the big one. So market expects the RBI to deliver a dovish pause today. That is the first point that I want to start with on your screen. Markets expecting the RBI to deliver a dovish pause. How will they do it is the question, right? The government's already done a fair bit in terms of trying to stimulate demand, etc. Now you've got the RBI. RBI has already delivered 125 basis points in terms of interest rate cuts. They've done a fair bit for liquidity, etc. But what now is the question. So, by the way, there is a fair chance, I think, that you can get a cut as well, 25 basis point cut. Or, the majority, though, is still in the favor that you'll get a pause. And then the remarks perhaps will be dovish. Supportive for growth, ready to do more, etc., etc. So RBI governor's remarks and the Q&A will be important. The decision, of course, comes in at 10 a.m. in the morning. More on this with Lata, our colleagues Ritu, etc., in a little bit from now. U.S. equities were higher, so S&P 500 about 0.4 up, Nasdaq about 0.3% in the green. Macro markets quiet, 10-year yield and the dollar index absolutely flat. Pfizer saw a very large move, 6%. This are basically after they got a 3-year reprieve from tariffs, Trump's tariffs, after they basically said that they're going to cut prices on some drugs for U.S. buyers. More on this with Ekta a little later, but I think this is important, maybe some implications for Indian pharma companies as well. And of course, today, the focus later out of the U.S. will be on the impending U.S. government shutdown. And Trump essentially was on record saying that, the shutdown could do a lot of good things. Well, we'll see if a last-minute deal is struck or, this really we go into a shutdown. We've had these many times in the past over the years as well. Chinese markets, onshore markets are closed from today to the 8th of October for the Golden Week. So it's a fairly long stretch, so you won't have queues from there. Oil prices were down a little bit, 1.5%. $67 a barrel is where we finally left off at. Now to the markets, right? So 2 days now, we've been sort of pointing out that, we are oversold and extremely oversold by some matrices. And they started from the top about, 7-8 days back. But bounces are not lasting. They're still not lasting. So we'll have to see. There's a fair bit of FII selling, etc. as well, which I think is at play. So we'll have to watch this. The levels don't change very much. The resistance and the supports on your screen for the Nifty. So the immediate support for the Nifty is in the zone of 24,400 to 24,330, which is the prior support. It's a level we put out for. There's a trend line supported about 24,500 as well, but it's a minor one. The big one is that zone. And the resistance is 24,788. That is nothing but the upper end of the daily Bollinger Band. And the 40-hourly exponential is 24,829. So that's the range in terms of resistance. By the way, interesting, the Bollinger is lower than the hourly average. But that is the resistance zone. Nifty and Nifty Bank are seeing slightly more divergent trends over the last couple of days. 2 days in a row now, Nifty Bank has managed positive closes. Here, the immediate resistance is the 40-hourly, 54,797, and then 55,215. The support is the low of 54,226. We'll see if there is enough in the tank as we go into a market holiday tomorrow as well to maybe execute a bit of a bounce, which the markets failed to do so for 2 days in a row. Now, GIFT Nifty gives you a quick sense of how we like it to start, 20-odd points lower. Typically on RBI days, there's a fair bit of action concentrated around that 10 a.m. And of course, once the policy the statement and the Q&A, etc., starts as well. So it's in that sense a bit of stretched out, even if the market wants to do in terms of reaction. F&O setup, how are the stats looking? Nigel is here with exactly that. Nigel, morning.
Well, towards the end of the September series, the bulls were definitely singing "Wake Me Up," after September ends, because the way the markets cracked close to around 800 points or thereabouts, that gave the bulls a very, very, uncomfortable feeling. The question is, we are moving to those extreme levels, and normally when we reach those extreme levels, we do see a bounce. Are we there yet? Let's pull up a few data points. The big headline is the Nifty is on an 8-session losing streak, which is clearly making the bulls very uncomfortable, and the bears will be very pleased to look at that headline. However, if you look at what history suggests, the 21 instances that we have seen, the 8-session losing streak, well, 65% probability in the next 20 sessions actually we bounce back. And the average returns have been close to around 3%. I'll tell you what, the bulls would love this outcome if this is what history suggests. And hopefully, this time around, from a bullish perspective, it plays out again. So 8-session losing streak may not be such a bad omen. The next point is the FI net short positions. At the start of a series, it's at around 94%. No mistake out there. 94%, it's the highest ever. In absolute terms, it's around 1.76 lakh contracts. So the FIs are aggressively net short. Now, we've seen a bit of a pullback, but actually the VIX has still been at very, very suppressed levels. Earlier in the series, it went down to sub 9. And even right now, given the kind of volatility we have seen, the VIX is not indicating any kind of panic or any kind of sharp pullback. At least as of now, at 11, it's pretty much in line. Moving to the next data point then, the margin trading funding. That was at around 65 to around 70,000 crores or thereabouts earlier this year. Now, that's moving to the record high as well. So there is some margin trading that's happening out there. Sometimes from the broader markets, it gives you a bit of an uncomfortable feeling. However, the other way of looking at it is it's par for the course with the kind of wealth that a lot of these HNIs have created. Some margin trading is what we are seeing. What's helped us in the last few trading sessions, last couple of trading sessions, the reason that we haven't fallen off the cliff is the DI buying has offset the FI selling. That could be an element out there of expiry-related factor as well that did play out. But institutions were net buyers, so you like that. Moving to the levels then, I was looking at the options data, looking at the technical levels as well. The problem is on a day-to-day basis, the Nifty has been making lower highs. So the first level you're looking at is you want the Nifty to actually at least break that jinx and start making higher highs. So that's the level you're looking at, important level to track. On the downside, this 24,500 mark, that's the near-term level. So that's a 250-point band that you're looking at. We'll have to see whether or not the Nifty goes ahead and breaks any of these levels. The Nifty Bank, that's been actually trying to pull back. Last couple of trading sessions ending in the green. Very close to the 20 DMA, you wanted to get past this mark. That's the important cue from a bullish perspective. Moving to stocks that I'm looking at, all of September I was highlighting RBL Bank. RBL Bank was the one that we're looking at. Saman Capital, that's still in the F&O band. We saw large fund-based buying. It's in the F&O band. And there is some optimism with regard to the fundraise, so we continue to remain that. And RBL Bank was the outperformer for September. Periodically, it's been in and out of the F&O band. The street is sensing something. We'll have to see whether what they're sensing, the outcome, is as much as they expected. So that's a stock you continue to keep on your radar. And finally, RateGain, they have gone shopping this time around. They've gone ahead and they bought Surgen for around $250 million approximately. Effectively, in the next 2 years, their revenues double and EBITDA could go up around 70%. So it's that time to go shopping. We'll keep an eye out on this stock. Finally, the cues that we're looking at, earnings season, festive season as well, US data, the US tariff situation as well. All of these will be in our radar. And for today, the RBI policy, the outcome will be crucial. So we're moving to those extremes. Are we there yet? If yes, expect some bit of a relief rally.
And, through all the news and noise and the tariff issues throughout the month of September, the Nifty was unchanged in those 30 calendar, days. We started September at 24,625. We ended September at 24,611. So back to square one, essentially. Let's see if this, changes now and if October provides a more, sort of a directional cue. As far as the implied open is concerned, let's pull that up because Asian markets, Hong Kong is shut, China is shut. The others are fairly mixed, so not, too clear in terms of direction. As this whole deadline issue, the US government shutdown issue, continues to prevail. Let's pull up the implied open and see what indication is. 22 lower. That's what the GIFT Nifty is suggesting as of now. So let's straight away get to the equity call. Jonathan Garner of Morgan Stanley says that their Asia EM coverage markets have traded close to June 2026 bull case targets, almost entirely due to multiple expansion. He says they doubt this is sustainable unless there is a significant re-acceleration in global growth from here on. He says that economics team continues to see growth risks ahead, particularly in trade-dependent economies. He says earnings estimates revisions since April have been flat to down, unlike in the US, with a slight tick into the positive recently for China. So that's the overall EM landscape as per Morgan Stanley. Of course, they continue to be positive on India.